Hello everyone, welcome back. Today is Thursday and we are every day a little bit closer to the NFP. But one thing that we haven't yet discussed was the big miss that the consensus had on the Australian CPI yesterday, the 27th of August of 2025. Primarily in July, we were in the band, all right? So we were into what the RBA, the Reserve Bank of Australia, or any other bank say that they have control over the inflation. So the inflation has, a target, a band that they usually are looking for to maintain the CPI prices in. So instance in Australia is 2%. And we had a big miss on yesterday's releases. But before we go any further, just want to make sure you guys are subscribers to the channel. If you're not yet, please do it. It's simple, it's free. We don't charge you anything. And also leave us a thumbs up on this video. That's very helpful. And don't forget to join the Telegram. Okay, the Telegram community is growing every single day more and more, and that's very awesome content that I'm posting over there every single day as well. So that being said, let's get to the point. I'm looking at official numbers, of course. So the monthly consumer the monthly consumer price index, that is the CPI, rose to 2.8%. 2.8%. So that's insanely higher than what we were in July. Okay, so for the 12 months, so that's the year over year. Okay, so to July 2025. The CPI inflation was up 1.9% previously, and now it's 2.8. So that is 0.9% of an increase. That is nearly 1 point, full percentage of a higher inflation. So when we look to the release, straight after the release, we were having the Australian against the US dollar trading at 64.300. Around 64.300, 64.250, so around those 5 pips difference. Soon as the release hit it, all right, like literally a few minutes after, the 1 hour candle was literally the 1 minute candle were literally making all-time highs every minute. And also, if we look at the 1 hour candle, it's a full green candle. Okay, so the release was really strong compared to other releases that we had on the market. So of course, the Australian dollar was rallied, and the reason is because now the population, the market actually, is expecting less to maybe no rate cuts coming into the next quarter of this year, the last quarter of the year. Okay, so it was trading at 64.250, 300. Went all the way up to 64.900 to 65. Okay, so that's a big move in less than 1 hour. Even if I drop down the time frame to a 5-minute chart, we can see that straight after the release, 5, 10, 15, 20, 25 minutes, 30 minutes was consecutively just going up, and then stop for a while and then continue to go higher. So the reason is pretty simple. As I just say, we had a central bank trying to be dovish in a sense, but they didn't cut previously. So the last meeting they did, but before that meeting they did not cut. And that's where I told everyone, look, they know things that we don't. Okay, one of the reasons why the CPI was so high was because of the rebates here in Australia. So the government, trying to help the population, gave some rebates in electricity at beginning of this year. So let's say you spend, $100 per quarter, all right? So every 3 months you spend $100 into electricity. The government would pay a percentage of that to not give you the money, but pay for the electricity provider that provides the electricity to you. That was a bit confused, but anyways, I hope you understood. So the government was actually maybe having to get the money out from the bank to pay my own spending. So in a sense, they are generating inflation. But then the population, took so much advantage of that basically the rebates was high enough to generate high inflation into the last few months. And that's the result. The remembering that inflation, it's, people are spending today not to have inflation tomorrow. They're spending today to have inflation inflation in the next 3 to 6 months. So it takes time to reflect into the economy. It's nothing like, boom, inflation, another percentage, no. It's not like that. You take a bit of time to actually, the inflation takes a bit of time to actually be felt into the economy and to be felt into our pockets as well, all right? The everyday consumer, everyday spender, the household keepers, okay? So what is my take? 2.8% annual CPI inflation, very, very high, okay? So we're basically giving a few steps back, but that's not a problem because we most likely won't have any rate cuts, okay? I would say if they do, it's a crazy thing to do, but most likely we will have some sort of slow fit into, breaking a little bit, going downhill now, breaking a little bit of that, to don't go above 50 kilometers per hour. And therefore, most likely we will see some kind of very neutral to, I would say neutral to smallest, very small dovish in a sense from the RBA governors and the chairmen, okay? So most likely they will maintain the rates higher for longer and therefore will of course bring some cash, some interest from other investors inside of Australia, okay? So my expectations is still Australian dollar against the US dollar higher by the end of this year. So I'm still longing Australian dollar against the US dollar. I hope I did, some sort of an overview here and you guys could understand a bit of what's going on. If you have any questions, please don't forget to put that in the. So guys, thank you so much. I see you tomorrow, and if I don't see you tomorrow, have a great weekend, and I chat to you on next week as well. Bye bye.